my Lord, we're live. Happy Friday. It's Financially Fluent Friday. Got Sarah Haliburton with the Beer Hope team. How are you today, Sarah?
I'm great, Zach. How are you?
I'm batting 1,000, doing well. Happy Friday to you.
Happy Friday to you as well.
You've had one heck of a week, I got to tell you. I saw some very, you've been busy, girl. I love it.
Super busy, but busy is good. Busy is good. I'll take it all day.
The right way to be. It's the right way to be. Well, we got a lot to talk about today, and so I want to jump right in and kind of jump into some of the topics. We went over a couple things together I think that are really going to make that are really important, and they're things that I've been asked about a lot recently too. So, I'm sure you heard the same things, and I think it's important to jump in on them. So let's just get going right away. And I want to start off talking about the adjustable rate mortgage. And I know that this is something that you're probably hearing from clients and they're asking about it. And I've heard a lot of people asking about it because bottom line is that the interest rate market's up. Everybody knows that at this point. It's something that we're seeing happen. And at the end of the day, that impacts the bottom line of your monthly payment. So want to talk about those a little bit and then go into some of the technical stuff. And from your side of things, are you seeing clients ask about these much right now?
A couple. And, then it comes into us as professionals, like when do we actually advise them to take these, right? Like, so who is the ideal candidate for an option arm and why would it make sense? And in what scenario? And then what are the risks, right? So our job as real estate and mortgage professionals is to actually guide our clients on that path. So I think it's super important for us to touch base on this and find out who is the perfect candidate for that.
Definitely. And, one of the first things is the myth that, you're going to get this lower rate, you're going to qualify for more. And a lot of people don't recognize or realize that right out of the gate, you still have to qualify at that higher point. So let's talk a little bit about the rates right now. I'll kind of jump into what it is that you can expect and then go from there. So the benefit of an adjustable rate mortgage is that you're going to have a lower mortgage rate right now. You're going to have, probably at this point, what I'm seeing, almost a full percent, if not even a little bit more, 1.5%, 1.25% lower rate, depending on your profile. All the rates are going to be based on your profile, of course, bottom line. So there's a benefit. So your monthly payment's going to be good. And depending on the option you choose, most people are looking at a 5-year arm. So what that means is that the interest rate is fixed for 5 years. After that, though, you're subject to the market. So whatever the index, and rate's based on an index without going too technical for you. Based on that index, it can go up to 2% in most arms, and most 5/1 arms, five adjustable arms, 5/6 is what they're called at this point. And then after that, they can go up 1% as well for subsequent raises. And the thing is that when you qualify, you have to qualify based off of that higher rate, the fully indexed rate is what they call it. And so it doesn't necessarily give you higher buying power, but what it does is it lowers your overall monthly impact. So that goes directly to what you were talking about, Sarah, is who's the right client for this? And from my perspective, I know that I'm looking at a client that they're not needing to get more house. They're just trying to lower their monthly overall obligation. What do you see from your side?
Same. I have some clients that they know that they're only going to be in San Diego for a short period of time. They know that they're going to be, maybe they have orders and they're here for 4 years, or, they're only here for a certain amount of time. Their kid's going to college. They want to buy them a condo. They have the cash. They have all of that, but they want to minimize the monthly payment. And then they know that at the end of that 4 years, 5 years, they're going to sell their house. They know for sure 100% they're not keeping it. It's going to be sold. And so that's kind of when we start looking at, okay, if you know that this is not a long-term real estate play and you know that you're going to sell in that time or before that time, then this might be a great product for you.
Yeah, and another thing to think about is that in this situation, depending on the purchase price of the home, you can actually even buy the interest rate down a little bit, get a much lower overall rate than what we're seeing right now in the market, and that saves you a lot of money up front on the cash flow. And so that does definitely help. And if you look at it from that perspective, and we can talk to a loan officer, I'm happy to help, by the way. But if you do the numbers and you run the numbers, if you get the lowest rate you possibly can, you could even see the benefit up to 7 years and longer. And on average, right now we see, it's changed a little bit over the last couple of years because rates were so ridiculously low. But the average is that most people sell or refinance every 7 years is typically what the numbers have historically been. The last couple of years have been a little bit different for that because the rates have been so low, so it changed things a little bit. But that's another thing. You could potentially invest a little bit up front, buy points, which, it depends on what the numbers tell us, in my opinion. But, you could say that as well. So there's a risk and there's a reward. The reward is lower now. The risk is potentially long-term. If that property is something you don't want to sell, you could get in a tough spot, right? So, yeah, that's kind of my take. What do you think?
100%. So, And I think most people, and while you qualify for the interest only, I think the people that are super savvy on this type of a product, they're still making the full payment. They're
Yep.
still paying the full amount, while they don't have to, but while they can, they're still making that extra payment. They're still adding more to the principal. And then when they go to refinance, they're in a much better position. So I think it's for the right client. It's not for every client, right? And I think it's also for the person that is super versed on the product, knows that they're going to sell or refi within that time period, and has the liquid to do it.
Yeah. Yeah. And that's something I'm really big on. Obviously, I share my parents' example because they, in the market, they lost their house because my dad and my father, unfortunately, fell kind of victim to some of those crazy option arms back in the day. And you do have to really look at all the numbers and look at what it really breaks down to, because there is nothing guaranteed with as far as the rate markets are concerned. And in that 5 years, you could see a massive change and it could really impact you. So I think at the bottom line is that make sure you look at the numbers, dig in detail, and establish your goals. I think that's going to tell you what the right course of action is, right?
And Zach, I think too, a big part of that is being in constant communication with your lender and realtor partners, like watching the market constantly and constantly having your clients up to speed and up to date on what's changing and what's moving in the market is super important, especially when you're in a product like this.
You know what? That is a perfect segue, Sarah. It's almost like we planned this and we didn't really, but we shift gears and talk about choosing the right team. Now, you told me a story today that I've seen happen, and I actually I have a situation that I'm dealing with that's kind of similar, but you told me a story today of one of your clients and they're dealing with something, and it really highlights how choosing the right team is so important. So I want you to share that story right now if you can.
Yeah, so I have a great borrower, great buyer. We struggled a little bit finding her the right property just because it was so competitive. And so part of that was getting her pre-approved, obviously. She had a friend she wanted to use. I had her pre-approved with another lender just for, perspective of what she could qualify for, where the rates were at. And she ultimately decided to go with her friend, which I get. We had a 15-day close. We're now on day 35 of that 15-day close, which hurts a lot. Luckily, the seller is also the listing agent and has been very accommodating to us. But when I finally got tired of the runaround, I called the head of the mortgage company and I said, yo, where are we at? Like, what's going on? And come to find out, the borrower wasn't even approved for the loan until 3 days ago. So
real quick, had you guys released contingencies? Have you guys put their money on the line at this point? Oh my.
Yeah.
Oh my.
So, and not only that, but the borrower actually gave her notice to where she was renting. So she has to be out by Saturday, but we're not going to close until Monday or Tuesday. So we had to get an early occupancy agreement. We had to do all of these different things. But that's why finding the right lender is so important up front.
Makes a huge difference. I mean, and also the other side, someone who, you just hit on something on the realtor side, the fact that you were able to reach out, you had the connection where you're able to figure out exactly what was going on and get in contact with the right person. And the other side is that you were able to negotiate an early occupancy. They're not obligated to do that. There's no way that they're obligated to do that. And moreover, I could guarantee you that if you hadn't been in communication and been on top of it the way that you had, that seller would have walked with the money. I mean, this is a market where there's not a shortage of buyers. Bottom line, there are people that want to buy homes, and had you not been on top of that, there's no way that person wouldn't have just. There's a very real possibility, I guess, to say more accurately, that they could have just walked with that cash, and then your client would have been in a whole lot worse situation.
100%, especially since this has been, a 4 or 5 month process with her to find the right property, get everything done, and then come to find out at the last minute that we weren't even approved for the loan. I mean, it's a lot.
Wow, that's yeah. I think that would be a bit of a surprise on my side. And, if you're doing, and I'll just say this because this is, how I work. That should never be the case. Look at me. I'm looking at the camera here. So anybody who's watching this right now, that should never be the case. You should know you're approved before you go out there. Don't put your money on the line. That could have cost that client a whole lot of money and put them in a tough spot. So wow, good job saving it. Good job being in communication there. Glad to hear that they got it going. That's a little scary. I got to say, you probably had a little bit of stress on that one, huh?
A lot of stress, but it's almost done. It's almost done. We're supposed to get docs today.
Cool. All right. Well, perfect. So you're only going to be 39 days in before you close out. That's all right, though. That's good. All right, well, let's shift gears. One more piece of the puzzle. I want to talk a little bit about condos. Obviously, as you mentioned, we were talking a little earlier, and you mentioned that price points are changing. Rates are up, so it's a little more expensive to own a property. So we do have people looking at condos and townhomes and things like that. Now, the nice thing is that with townhomes, you're going to end up, you don't really have to worry about this so much most of the time. But with condos, you always need to make sure, one of the most important questions is that condo FHA and VA approved? And there's a lot of things that go into it. One of the main things is occupancy, but there's some other things that I've seen that I could dive in on, but I don't want to get too technical with it. But, how does this impact your buyers and the home search?
So a lot of times we'll get properties from buyers and they'll say, oh, I really like this, but they're stuck where they're VA, they're putting nothing down, and the condo's not VA approved. Doesn't mean it can't get VA approved, but that usually costs about $1,200 out of pocket to the borrower for an attorney to get it VA approved. And I don't know about you, Zach, but a lot of times they're not VA approved just because no one filed the paperwork. It's not that they're against the VA. Same thing with the FHA. It'll expire and no one goes back and refiles it. And there's a couple things, like you said, like we don't really want to get into the weeds on what is and is not. But when we get those properties that they're super excited to buy and go look at, and then we find out that it's not FHA or VA approved, then we're back to the drawing board. And like you said, a lot of it's owner occupancy. Some of it is how much reserves the HOA has. The FHA and VA are trying to protect you, the borrower. Like that's what they're trying to do.
Yeah, and there's part of my process when I work with somebody who's going and looking at condos. I always have my realtor partner send the address because I want to look at the property. I do the footwork and the research to make sure there isn't that question there, and then I evaluate whether or not it does make sense that we do what's called a spot approval. Can we get it done? VA is a little bit easier usually to do a spot approval. FHA can be a little more tricky in my experience, at least, but and which I think is odd, but that's neither here nor there. But the other thing is this: it's adding another layer to the transaction. It's adding another layer in an already competitive market to the transaction. And so if I'm a seller and I'm looking at it and my client, and I have two options, one's FHA and I know my condo's not FHA approved. I have another one that's conventional, ready to go. Who am I going to choose, right? I think that's kind of almost a no-brainer depending on the terms of the loan or the purchase. And, one thing I get scared of, I don't like, is that there's this misconception about VA loans and FHA loans that they're somehow worse. And there are some wrinkles with them a little bit, but there also is that misconception sometimes. So
Zach, I heard that the VA and FHA hire separate appraisers that actually go out, and that they have their own appraisal crew, which is not true. Okay, it's the same appraiser that does a conventional loan versus a VA, but there's a lot of misconceptions over FHA and VA loans.
Yeah, no. Yeah, it's funny. You hear those things. I've seen some interesting posts. One of the beauties of social media is all sorts of stuff gets spread around very, very easily. No, yeah, absolutely. They're just different certifications for doing different types of loans because the loans have different requirements, right? And that's that. So, no, it's kind of talking about the approval process. It's not that difficult to get done if the property is going to meet the standards. Now, if the occupancy is not there, it isn't going to happen. And and if there's situations where there's litigation or there's, like you said, the reserves aren't there, there's a couple things that it just won't happen. Bottom line, I've had times where I've had clients I've actually contacted the HOA and they said we just have zero interest in going in and looking at it, because I've actually directly reached out to the HOA management and they said no, we're not going to do it. It's nothing that we have an interest in, which is frustrating, because I think in those situations a lot of times they can, but that's not something that we control. But it can be done. I'll tell you that it's few and far between with FHA for whatever reason. I always end up running into a wall with them. I've had a couple that I've gotten done over the years, but VA is a little bit easier. Like I said, it typically, for whatever reasons, there's a couple. Again, don't want to go into the weeds on it, but I go in there.
And Zach, from the real estate side, these are things that we're advising you as you're purchasing too. Like if you're purchasing in a complex that's not VA or FHA approved, how will that affect your resale? What should you be looking at when you're buying? Because you may be conventional today, but your buyer, when you go to sell, might be VA or FHA. Is this the best, highest return where you're going to get the most buyers and the most demand for the place that you're buying today?
That's it. Well, so bottom line on that side, if you're doing your shopping, make sure that your realtor and your lender are talking to each other, that your lender is looking up and doing the footwork and making sure that the property is approved. So that way you don't have, because that's one of the other things I've had, a couple times where I actually had one I think of a lot that was I won't impugn the realtor. It was a long process for my buyers, let's put it that way. And it came to a point where after about 2 or 3 properties, I started making her send me the addresses, say, listen, wait a second. Why are you looking at this house? We're doing an FHA loan. They can't, send me the addresses. And it got to a point where, they were looking at a lot of homes. And so I was doing a lot of footwork. We ended up finding the right one. But, that's part of that communication that we have to have. And part of that relationship that you have to have between both your partners, and kind of goes back to our previous topic of having the right team. Are your lender and your realtor talking to each other, and are they in communication about what you're looking for in the search?
And absolutely, you need that synergistic relationship between what the lender can actually do and perform on, and what qualifications you need to get your offer even accepted, and then what property even matches what you're approved for. So between those three, it's super imperative to have that winning team, because otherwise the communication delays and the things in between can cost you the deal.
Yeah, no, absolutely. Well, I tell you what, Sarah, I really appreciate you jumping on with me today. I know you're busy as all get loose over there. I know I've got a lot of irons in the fire over here as well, so I'm going to jump off. But happy Friday to you, and
happy Friday.
Make it an amazing day. If you guys ever have questions, you ever have anything, drop them in the comments. Let us know. Sarah and I are happy to help. Sarah's on a killer team. She's a killer agent. She's been doing this a long time. She knows her stuff, and you can look at her resume. Her resume speaks for itself, and that's that. And I'm all right myself. So if you'd like to jump on it, if you have questions, there's nothing, know a little bit. So anyway, have a great day. Happy Friday.
Happy Friday.